Have you ever wondered how to make millions from stocks? This is the million-dollar question that piques the interest of many, but the process often seems too complex or risky. Yet the world of stock market investing is not as daunting as it may appear. Today, we aim to simplify this process, to break it down into manageable parts and dispel the fog of confusion that often surrounds it. We will explore the potential of stock market investing, the power it has to turn modest savings into substantial wealth. This is not about quick riches or dubious schemes, but about understanding a legitimate financial system that has the potential to generate astonishing returns over time. It's about making your money work for you and not the other way around. So, whether you're a novice investor or someone seeking to refine their strategy, this video is for you. If you're intrigued by the prospect of turning a few dollars into a fortune, you're in the right place. The stock market might seem complicated, but it's just a place where buyers and sellers meet to trade shares. Let's break it down a bit. At its core, a stock is a tiny piece of ownership in a company. When you buy a stock, you're essentially buying a slice of that company's future profits. Companies issue stocks to raise money for a variety of reasons. Maybe they want to grow, launch new products, or pay off debt. So how does it all work? Imagine a giant global marketplace where people from all over the world can buy and sell these shares. That's the stock market. But instead of haggling over apples or oranges, people are trading ownership in companies. It's a bit like an auction house, where the highest bidder gets the goods. Now here's where it gets a tad bit more complicated. The price of these stocks fluctuates. It's based on supply and demand, just like any other market. If a lot of people want to buy a stock, demand, the price goes up. If many people are trying to sell a stock, supply, the price goes down. But what influences this supply and demand? Well, a multitude of factors. Everything from the company's financial health, political events, economic indicators, even rumors can affect the price of a stock. This is why you often see stock prices moving up and down throughout the day. Now, you might be wondering, how do I actually buy and sell stocks? Well, most people do it through a brokerage, which is essentially a middleman between you and the stock market. You open an account, deposit money, and then you can start buying and selling shares. So, to make money from stocks, you need to buy shares in companies and sell them for a higher price. Of course, this is easier said than done, and it involves a good deal of research and a healthy dose of patience. But with time and practice, you might just find yourself becoming a savvy investor. Now that you understand what the stock market is, the next step is figuring out how to start investing. Let's kick things off by setting financial goals. Think of these as your investment roadmap. They might be short-term, like saving for a vacation, or long-term, like planning for retirement. Your goals will determine your investment strategy and guide your decisions. It's crucial to be clear about what you want to achieve and set realistic expectations. Next up, research. Yes, it might sound like a chore, but trust me, it's worth it. You wouldn't buy a car without checking its mileage or safety record, right? The same principle applies here. Before investing in a company, you need to understand its business model, performance, and industry trends. Financial news, corporate reports, and market analysis are your best friends in this journey. You're not just buying a stock, you're buying a portion of a company. So make sure it's a company you believe in and understand. Now let's talk about one of the most essential elements of investing: diversification. In simple terms, don't put all your eggs in one basket. Spread your investments across different sectors and types of stocks. This way, if one area of your portfolio takes a hit, other parts might still perform well, balancing things out. Diversification is a key strategy to manage risk and potentially enhance returns. But here's the deal: starting your investment journey can be both exciting and nerve-wracking. It's like learning to drive. Initially, you might feel overwhelmed with all the rules and signals, but with time, practice, and patience, it becomes second nature. Investing is similar. With time, you'll become more comfortable making decisions, understanding market trends, and navigating the financial landscape. So don't be discouraged if you don't become a millionaire overnight. Investing is a marathon, not a sprint. Remember, investing is not a get-rich-quick scheme. It requires patience, research, and strategic planning. Embrace the process, and before you know it, you'll be well on your way to achieving your financial goals. There are numerous strategies for investing in the stock market, but we'll focus on two popular ones: long-term investing and day trading. Long-term investing, as the name suggests, is all about patience. It's the slow and steady approach. where you invest in stocks with solid fundamentals and hold on to them for years, if not decades. This strategy assumes that, over time, the market will rise, and so will the value of your investments. The benefits of long-term investing are clear. It requires less time and energy, and it's typically less stressful since you're not constantly watching the market. Plus, it's historically proven to generate positive returns. But like all strategies, it has risks. The market can be unpredictable, and it can take a long time to see significant returns. On the flip side, we have day trading. This is the fast-paced world of buying and selling stocks within a single trading day. The goal here is to take advantage of small price fluctuations to make quick profits. Day trading can be exhilarating and potentially lucrative, but it's not for the faint of heart. It requires a significant time commitment, as you need to constantly monitor the market and make quick decisions. It's also riskier, as the market can move against you quickly, but with the right skills and mindset, it can be a profitable strategy. So, which strategy should you choose? Well, that depends on a few factors. If you're looking for a more passive approach and are comfortable waiting for your investments to grow, long-term investing might be for you. If you thrive in a fast-paced environment and are willing to take on more risk, day trading could be your game. But remember, no strategy is foolproof. Both long-term investing and day trading come with risks, and it's crucial to understand these before diving in. Doing your homework, staying informed, and being patient are key to successful investing. The strategy you choose will depend on your financial goals, risk tolerance, and time commitment. Opening. Investing in stocks can be rewarding, but it's not without risks. As we navigate the stock market, it's essential to stay mindful of common pitfalls that could potentially derail our investment journey. One common mistake is acting on emotions. We've all heard the stories. Stocks plummeting and people panic, selling their shares at a loss, only to watch the prices bounce back later. The stock market is not the place for knee-jerk reactions. It's important to keep a cool head, stick to your investment plan, and avoid making decisions based on fear or greed. Another pitfall is following the herd. Just because everyone else is buying a certain stock doesn't mean it's the right choice for you. The stock market is not a popularity contest. It's about finding investments that suit your needs and goals. It's crucial to do your own research, understand what you're investing in, and make decisions based on that knowledge, rather than what's currently trending. Neglecting to diversify is another common blunder. Putting all your eggs in one basket is rarely a smart move. If that one company or sector goes under, so does your investment. Diversification, or spreading your investments across different types of stocks and sectors, can help mitigate this risk. It's like the old saying goes, don't put all your eggs in one basket. Remember, investing is a marathon, not a sprint. It's not about getting rich quick, but building wealth over time. Patience and discipline are key. Now, how can you avoid these pitfalls? The answer is simple: education. Learn as much as you can about the stock market, keep up with financial news, and maybe even consider taking an investment course. Knowledge is power, and the more you know, the better equipped you'll be to make informed decisions and avoid common mistakes. Closing. By avoiding these common mistakes, you can increase your chances of making a profit from your investments. Remember, investing is not a game of chance, but a strategic endeavor that requires knowledge, patience, and discipline. So, keep learning, stay patient, and let your investments work for you. So, are you ready to start your journey to becoming a millionaire through stock investing? We've covered a lot of ground today, folks. Remember, understanding the stock market is your first step. It's not a casino, but a platform where businesses raise capital and where you can become a part owner of these businesses. Starting to invest is your next move. Don't rush. Take your time, save up, and start small. The journey of 1,000 miles, as they say, begins with a single step. Choosing an investment strategy is crucial. Whether it's value investing, growth investing, or a blend of both, find what suits your risk tolerance and stick with it. And finally, avoiding common mistakes. Don't let emotions rule your decisions. Be patient, stay disciplined, and always continue learning. With patience, research, and strategic planning, you can potentially make millions from stocks. Happy investing,